How much cash do you need to actually use the VA loan? And here's the sobering truth, it's more than you think. I see too many military families think that 0% down means $0 out of pocket in order to buy a home. And while in certain cases it is possible to go to the closing table and not have to pay any dollars out of pocket, but it's not normal, and I certainly don't want you planning for that to be the case. This video is going to be a recap of the VA loan and all of the costs associated with the home purchase, the hidden fees that surprise people, and exactly how to financially prepare to get ready for this phase of your life. And I'm gonna look you in the eye and be direct with you. However much money you think you need after watching this video, double it or maybe even triple it. Purchasing a house can either be an incredible asset and benefit or a huge crippling liability if you are not mentally, emotionally, and financially prepared for home ownership. So take care of your financial situation so that way home ownership becomes a blessing and not a burden. Let's jump into it. Here's a quick reminder of what the VA loan actually does and what it covers, because at the end of the day, it can be an incredibly powerful tool for veterans and military families. The VA loan allows for a 0% down payment when purchasing a home, which means that you do not have to pay any cash out of pocket to be applied towards the purchase price of the home. In most cases, when you use what we call conventional financing and you are unable to put 20% down, 20% as a down payment, then you are required to pay what we call PMI, or private mortgage insurance. PMI is a type of insurance that protects the lender if a borrower fails to make their mortgage payment. And again, because you're unable to put 20% down, in the eyes of the lender, you become a higher risk borrower. Hence the need for the lender to enforce a mortgage insurance. And so one of the main benefits of the VA loan is that you do not have to pay PMI, even with a 0% down payment. That's potentially hundreds of dollars monthly that you do not have to pay in addition. And then maybe even the most enticing part of the VA loan, especially in today's interest rate environment, are the competitive rates that come with the VA loan, which are normally even a bit lower than a 30-year fixed conventional loan. VA loans are able to be this way because the US Department of Veterans Affairs, or the VA, they guarantee a portion of the loan, which reduces the lender's financial risk. So again, to put this in layman's term, the VA isn't the one actually giving you the loan. They are the ones providing a guarantee to pay a portion of the loan if you were to default on the payments. And because of this guarantee allows the lenders, again, such as a bank or mortgage company, to offer more favorable terms, including the lower interest rate, the no down payment requirement, and no private mortgage insurance. However, just because this is an incredible loan product doesn't mean you should just go all willy-nilly and try to buy a home or use the VA loan without some serious financial planning and consideration. So let's talk about the realities. 0% down does not mean $0 out of pocket in order to buy your home. There are still transactional and post-closing expenses that you need to be prepared for in the home purchase. The first is the VA funding fee, which is a one-time expense charged by the VA in order to keep the loan program alive. If it's your first time using the VA loan, the fee is 2.15% of the purchase price. For any consecutive uses, it becomes 3.3% of the purchase price. For example, if you're buying a $400,000 home and it's your first use of the VA loan, your funding fee will be 2.15% of that $400,000 or $8,600. You can pay this fee in cash at closing, or you can what we call roll this fee into the total balance of the loan, so that way you're not having to make any payments specifically at closing. But, and this matters, if you choose to roll that fee into the loan, then your monthly payment is going to increase, and it's going to increase the total amount of the loan. When that $8,600 VA funding fee is financed, meaning it's rolled into the loan, on a 30-year fixed loan at a 6% interest rate, you would pay approximately $9,800 in total interest just on that specific amount of money over the life of the loan. We'll do a little bit of math here to prove that to you. The funding fee is treated like any other part of the principal. So if your amount financed is $8,600 at an interest rate of 6%, that makes your monthly payment on that amount $51.16. If you multiply that by the loan term of 30 years, which means 360 monthly payments, you end up with a total amount paid of $18,396.80. If you subtract the original $8,600 of principal, you realize that you're paying close to $10,000 of interest over the course of the loan. Now, there's not enough time in the day in order to talk about the pros and the cons and the overall trade-offs here. I'm sure there are people who would love to take on that fixed rate debt on an appreciating asset, especially at the rate in which we are inflating our dollar. And I'm also sure there are other people who want to minimize their total amount of debt, reducing the total amount of interest they pay over the long term. But at the end of the day, I'm not a financial advisor. I'm just a guy on YouTube talking about how the VA loan works, so I'm gonna save my commentary here a little bit. For us, the key takeaway is that if you choose to finance the funding fee, you are gonna reduce the amount of money you pay upfront at closing, but you are gonna increase the total amount of interest you are paying over the long-term time of the loan. Now, I do have one very important note before we move on to the next section, and that is there is one exemption to the VA funding fee. If you have any VA disability rating, meaning 10% or more, then your VA funding fee is waived, completely waived. So if that's you, you're a veteran with a VA disability rating, then you can completely ignore everything we just talked about because it doesn't apply to you. And for my active duty folks and the military spouses who may be watching, here is your reminder to go to medical, or tell your spouse to go to medical, because your VA disability rating, on top of, again, providing a monthly stipend for you, can have real tangible benefit, especially in the realm of home buying. All right, section 2, moving on to what we commonly refer to as closing costs. As it turns out, everybody wants a piece when it comes to buying or selling real estate. There are fees charged by the lender for the loan origination and appraisal, fees charged by the title company for the work that they do, the county and city potentially charging a transfer tax, there's real estate agent commissions, and other third parties in the transaction as well. As a result, closing costs could range anywhere from 2% to 4% of the purchase price. So again, for our example of that $400,000 home, that could be anywhere from $8,000 to $16,000. That is a lot of money. Now, can these closing costs be covered by seller concessions or other credits to the buyer? Yes, and in many cases, they are. This is something I see negotiated into contracts very frequently. But your expectation should not be, oh, this will get covered for me. You need to plan on having that cash available, and then it's just a bonus and a benefit if your realtor is able to negotiate that into the contract. Now, moving on to section 3. As your friendly neighborhood real estate YouTube guy, I am here to tell you, get a home inspection. While it's technically not mandated by the VA, I am telling you it is not optional. Protect yourself. Now, if the seller proactively goes and gets a home inspection prior to listing the property, then you don't need to go out and get your own unless you want to. But these home inspectors are independent third parties with their own reputation. This is not something that they're being done in cahoots. You can trust these professionals with their home inspections. However, in most cases, in most states, you will be responsible for ordering a home inspection yourself. Prices will vary based on location, based on the size of the home, based on the availability, but I think you should expect to pay somewhere between $500 and $800 for a home inspection. Second, you will also be required to get a termite inspection. The VA does require that there are no active infestations of wood-destroying organisms. And the way you are able to prove that is by having a pest inspector come to the home and conduct a pest inspection. And again, since we're talking about cost, that'll likely cost you somewhere between $200 to $400 to complete in conjunction with your home inspection. So between the home inspection and the termite inspection, let's call it about $1,000 that you will be responsible for out of pocket as the buyer. Section 4. One more thing I want to mention is that once you get into contract, your offer is accepted and you're moving forward, you'll be responsible within 3 days to deliver what is known as an earnest money deposit, or EMD. The EMD typically ranges from 1% to 3% of the purchase price. This is dependent on state and kind of local norms. But again, for our example of a $400,000 house, that could be between $4,000 and $12,000 that you will be responsible for wiring to the title company immediately after your offer is accepted. This money does get applied towards your final closing costs, so you're not paying extra for this. But you do need to have that cash immediately available in order to solidify and ratify the contract. For example, if you deliver a $5,000 earnest money deposit and your total closing costs, again, the cost needed in order to actually close on the property, is $7,500, then you would only be responsible for paying an additional $2,500 at the closing table. In the case that you receive seller concessions or other credits that cover the total amount of your closing costs, then you would have any additional money refunded to you that was a part of your EMD. For example, in this case of a $7,500 total closing cost, let's say you received $7,500 in total seller credits. Now, you originally delivered that $5,000 EMD, but all of your closing costs were covered by the seller concession. In that case, you would actually receive your $5,000 back refunded to you at closing. The purpose of this section is, one, to let you know that you need to have that money immediately available in order to solidify the contract, and two, you need to be prepared to wire that immediately after you get into contract. Section 5. Because at the end of the day, the fun doesn't end as soon as you close on the home. Once you become the owner of the property, you now become the landlord. You become the maintenance guy. You become the HVAC guy. You become the emergency disaster plan and relief. You need to have a fund prepared if anything goes wrong for the property, and so much more. Welcome to home ownership. You need cash reserves in order to protect yourself. Real estate becomes a liability when you make decisions out of desperation. And the way to avoid that is by having more money available than you think you need in order to be safe. If you are buying a home and walking into this situation with no emergency savings, I'm going to say this lovingly, but I need you to hear me. You are not ready. You are putting yourself in a vulnerable position, and I don't want to see anything bad happen to you. Consult your close friends. Consult your family, a financial advisor, or other trusted parties. But I recommend that you have at least multiple months of full living expenses, plus about $5,000 to $10,000 extra for immediate repairs. Within your first year of homeownership, you want to avoid having to submit an insurance claim if you can fix these small problems with cash out of pocket. This will protect you from increased insurance premiums moving into the future. So I just want you to be prepared to handle those issues. Section 6. So we've talked about a lot of things, but how much cash should you actually expect to have in order to be ready then? Let's recap using our $400,000 home purchase example. And we're gonna be using average costs because, again, these may vary based on location, context, or other factors. Inspections, $1,000. Your closing costs, potentially up to $12,000. Your new home reserves, $10,000. Your personal emergency fund, $15,000. And if you add all of those up, it is my recommendation, again, that you have close to $38,000 ready to go, even when you're anticipating using 0% down. If that number makes you feel uncomfortable, this is why we are having the conversation. But at the end of the day, this is just my opinion and it's just a recommendation. You don't need to have that much. You can purchase a home with much less. You could get seller concessions to cover your closing costs, and you can buy the home without the emergency reserves and other cash savings. But if you do those things, you put yourself at real financial risk. And I just want to see military families taken care of in the real estate process and have real estate be a blessing to their life, not a burden. I say all of this not to try to scare you, but to prepare you. Home ownership can be a wealth building tool. It can be a stability anchor, and it can be a real family asset, but only if you walk into it ready. If you don't have someone that you can ask those questions to, or you just want my opinion, please, I'm gonna put my contact information right now at the bottom of the screen. It's also gonna be in the description of the video and on my profile, but send me a message right now. You can text me, you can call me, you can send me an email, just shoot me whatever questions you have right now. I want to be a resource for you. I mean it. Send me that message right now. I will gladly be your bodyguard in the real estate process and make sure that you are being taken care of by real estate professionals who are good at their job. And the best part, what I'm building with the Vermeer Group and this challenge for 2026, I will even be able to get you an additional client credit that will help cover some of those closing costs that we talked about in the video. So make sure to reach out. If you're wondering how that's possible, I'm even gonna put a link to a video that explains the business that I'm building and how I do it. So check it out and let me know what you think. If this video breakdown was helpful, please like the video. It helps me grow the channel and get the word out to as many folks as possible. And if you're interested in more videos like this, easy to understand real estate education for military families, then subscribe to the channel. I've got more videos coming up on how to pick a real estate agent, information about VA loan assumptions, how to approach the home buying process, and so much more. So make sure to stick around, subscribe to the channel, and I'll see you again next week.